Hello and welcome everyone to the weekly Delphian meeting. Thank you for tuning in. Today's agenda, it's just me. Joe's out all week. So let's go through the market update, earnings trades, and obviously if you guys have questions, comments throughout, please unmute and fire away. Um, all right, so let's get started. Pretty crazy week since last week. Market overview, SPX, NDX both went into two. Same with Dow. That was yesterday. And Russell still holding somehow in state one. Had a lot of turnover in the sectors. Energy went down to four. Um, industrials just went into two, and then discretionary went into two, and then XLK and XLC had been in there the previous week. So and big pie wise, we'll go through the market pulse, but huge drop, 68. So we're below 50 now. This is a huge drop. So, and you can see a lot more red here. So let's go dive into the market pulse. All right, so you can see, let's see, last week meeting, we were right at 46. I was kind of holding that 46 level. 45s are overbought. And then, pretty much right here after Thursday, this tanked down. So we're still above the state eights. If we look at, so that's an overall good sign. You can see back here, we've had a few. So this is April where the eights crossed over. And then back here, this was June when the eights crossed over, but this the SPX was really being driven up by NVIDIA and those other names. So this was a little bit weird. SPX wise, Russell still kind of tracked how the ones and eights were. But if we look at twos really popped here, nothing like the previous pullback here. You see the states still got to 34, but they have been climbing. So the last week we were right around 10, 11, so pretty much doubled that. Eights also going up, and then fours. So that's the big thing that we look at for um, longer pullbacks, like deeper pullbacks. It's the fours. So if we go back here, fours went up to nine, pretty much stopped right at 10. And that's right when the ones, sorry, I got a lot of charts here, lines. That's when the ones started turning around here. That's kind of right at the bottom, things flatlined. Um, also at that point, two started turning over. So that's kind of what we're looking at now to see if these bearish numbers keep building. Obviously, we had a couple days here. Yeah, we're green today a little bit, not a lot, but we'll just have to kind of monitor these, see if the ones keep free falling, and really keep an eye on the fours if those start building and building. Um, so that's kind of where we're at there. Sevens pretty much tanked, so all those sevens basically went into eight there. So we still got 6% in seven, so still could move some, but really we're looking at big picture is, are the one's going to keep going to two, and are the twos going to, we've had a decent number going to four already. It's like here, it's kind of muted. These are pretty much on the same line right now, but we'll see. I think some of the big um, support and resistance levels will help us out, but I would just kind of check these, every day or so to see how they're moving. All right. So we did have the break. So we had the lows pop up here. So, we're just gonna see how these do on a daily basis. We had a little pop up here, when the market was going down, and then just pretty much died after that. So we were having really good highs here and just flipped over right after right after the Fed. So I think a lot of people were expecting a little more aggressive language. I don't think the cut was expected at all, but I think people were expecting the language to be a little more solid. And we'll go into the Fed projections for September, but just keep an eye on this. That one day it pops, so we're down to 88 again. So maybe just you know one of those super violent pullbacks, but we'll kind of watch the support and resistance levels, see how those do. Um, these are way above, obviously, that crossed on this is a 50-day moving averages, so these all crossed over really quickly. Friday, Thursday to Friday, and then since then nothing. 200s are still safe. Uh, so we touched and then kind of pushing back a little bit. So could be a sign, but back here we had a little bit of a cross, and that was kind of it. If we go back to like bearish times, these numbers were, getting wider and very, very far apart. So, this could be a very violent pullback. But we'll have to wait and see on that. So, and bullish bears real quick. So we did get the cross. See if we get follow through, obviously. Just right above 50 for bearish. Big drop though from around 70. I think the high was 74. Yeah, 74. So that drop right there is real fast. So 68, 65. Pretty big drop real fast. So violent. And we'll see if it continues. So SPX went into state two. That was on Friday. Let's see. It's not the biggest drop, but the first kind of big bottoms up thing. So last week we were talking about getting back above, staying above that target three. So this was above target three, and then the next day was lower. This is after the Fed meeting, then just tanked. Same thing happened with Russell. Couldn't get above that target three in state one, and we'll show that in the chart. But the good news here is we already hit target three in a day. So a lot of times if we're in a bullish market, get down these targets and then climb its way up. So from here I'd really be looking upward if we can get above that entry price 53.46, and then not make new lows, obviously. But the range we're currently in is 5,400's the top, and then 5,000's the bottom. So let's take a look on the.
Hey, Josh,
Yeah, shoot, Lee.
thank you. Before you leave that screen, over there, right near where your mouse is, where it says state two, occurrence is 60.
Yeah.
How many do we know how many times of the 60 did it hit target one, target two, target three?
I don't know offhand. You could do it in you could do like a back test for that.
Oh, yeah, you're right. Okay, thank you.
Yeah. I don't think we built anything yet, as far as like on this analysis page. I think we just give averages. We don't have number hit, things like that. That might be useful to put in there.
Yeah.
Yeah, it just has like the average number of occurrences, stuff like that. So
Okay.
yeah.
Uh-huh.
So we're just at the beginning. It's a pretty short. I mean, it's basically like 2 weeks. already hit the average move. So it's just a matter of, it's just going to climb back up or roll back over. Occasionally we'll get things where it just kind of chops back and forth for quite a while, but we'll just have to see, if we get that climb up. I think it's very important to get above that entry, and then, you could test 54. You get above 5,400, holds, I'd be probably getting bullish again at that point. Right now, I'm just kind of wait and see type of strategy. So, and so I'll put the lines in here. So that's a 54. And then down below is at 5,000. So that's right on the 200. So if you look at, and we tested at 5,400, came up above. This was right above target 3. So we had a nice run above target 3. Basically, this broke out like that in the state modeling. Came back down below, got above it right here, and then just turned around after the Fed, and just swoop. We said a lot of the times, we drop into 2 from there, but so we drop, we're below the 20, we're below the 50, they're pretty much right. Let's just call it all 5,400, area. So getting above that, I'd start getting bullish again. Getting above entry price would be, first step. I think it's 53, 40, whatever, 46. So, and then obviously down to the bottom, you got 5,000, bottom of the range. So that's our current range. So, we'll just have to see how things pan out here. All right, so I'm not gonna target 3 was the big problem here. 1, 2, 3, 4, 5, 6, 7, 8. Pretty much 9 times failed. The 9th big time. So, like I said, if we could have gotten above there and stayed, we could have had a nice run. Obviously, it failed. We had one pop up all time high, not all time, but 52-week high there. And Fed day was after that. They just got crushed, which is a little surprising, because the rates dropped so much. But I think everyone just at once said, "Oh, recession's coming" or something. I'm still trying to figure out, why this would move that drastically. But it did hold state 1, but now we're back in that old range, 21.19. So getting above 21, just kind of like SPX getting above 5,400. We get above those. I'd definitely be. Yep.
Any idea why it held state 1? I thought for sure it would switch.
Yeah, I don't know. That's the magic formula. I definitely thought it would have pulled out of there after that.
Yeah. I was very surprised.
Yeah, very. So, so see if we can work our way up on here, getting above entry price, but before that, it's going to be 2,100. So today, I think we hit like 2094 to turn around. So really, the big number here is 2,100. And I'll move to the charts there. So let's pull up the lines. There's your 21, 19. Where are we at? There we go. Back in the old 21.19. So at least for short, temporary. So we did touch the top of that other range, 21. I mean, we were within like a point of it. And then, basically the bottom fell out. Across the 20, across 50. I think the good thing, the good sign here is we held support at the 200-day MA. The SPX, we didn't even really get close to it yet. But you know, the Russell, we are basically right on the so that's 1988. So you know, we're 5 points off, held it. So see if we can make a run back above 2100. You know, get back in that 21 to 2300 range. So really, the big support line would be this 200 MA, and just call it in the 2000 range. Like we say, almost every 100 is support and resistance here on the Russell. So 2000 to 2100 upside. So, but yeah, we'll see how things turn out. Let's look at the 10-year spin. Let me clear that. Oh, 10-year. Russell's negative now. Let's pull it up real quick. So we got up to 2094 and just pulling back since then. 10-year, very volatile. Very volatile. So yeah, we got down there like 36, 37 area. Yeah, we had, I mean, this wasn't long ago. We were up 47. Yeah. So go back here, we got up to 5, dropped all the way down in the same area. This one lower high, 4.7-ish, and you know, kind of a little lower maybe. But overall, yeah, we'll see if this kind of downtrend continues. But just the volatility in this is pretty crazy. Had like the V bottom here, I guess. That's like a visual V bottom if you've ever seen one. But we'll see if it rides up. So, you know, as far as rates, but markets obviously start rolling over. Still just kind of like a wait and see for me, see if we can kind of regain those levels. Yeah, we have big sell-offs. You know, there a lot of the times things will just pop up for a day or two and then you know, kind of resume. But especially with this volatility, I mean, I don't even have to tell you, the VIX went crazy. It's the first time in a long time. Pull that up real quick. But it like opened at 55. Yeah, it's absolutely insane. So the last time we got up in that area, it's COVID. And then the last time before that, I think was 08. Just looking at those charts, I mean, it's pretty crazy for VIX to hit it like that. So I think part of it is like Japan. I mean, I don't know if you guys follow Japan at all, but they're big in the news. We pull up that Nikkei. It's too much. 1 month. Oh, come on. I'm going back to the other chart. All right, my internet's slow.
Yeah.
This is like July, so this is like a month. I mean, this thing went from basically like 30, almost 40,000. You know, the other day it dropped to almost 30. It's like over, you know, a few day period, this huge drop. So it's kind of stabilized, but I think part of this was part of the issue. So okay, let's just talk Fed real quick. So just a long time, over a month. Next meeting, well, big changes here. Yeah, we went from this is 2 cuts from 11% to 60. So it's a like 50 basis point cut now is favored, but a minimum of at least 1 right now for September. And then November's definitely 2 by November so far. Big changes. I mean, they got 3 on the table now for 18%. So. Oh, that's actually 3 right there. Wow, 525. So, wow, one's just at least 2, not 3. Sorry, that's pretty crazy. I didn't even notice that. So this one's 1, 2. Yeah, so that's 2 in September, and now November. That's 3. Holy cow! I mean, this was a month ago, 2% probability. Now it's 55. So market's trying to tell him when he cuts fast. And then this is end of year. Everything shifted. Last month 1%. Now it's the the middle, the most favored, and that's a whole percent. By year end. So that's what the market's saying.
If there were a volatility index on Fed rate cuts, it would be at all-time highs right now.
Mm-hmm. Yeah, it definitely would. Is it? I don't even know if it's in there. I haven't gone much past this. I've looked at it a while, but I don't know if they have that. But yeah, definitely very volatile. So, all right. As far as news, nothing until next week, really. Tuesday, CPI could be a mover. And then, you got inflation, CPI on Wednesday. So those are the kind of big things to look forward to. News-wise, this is M2. You have talked a while about this. We'll just thought it was interesting. If we just kind of go trend line, we're still off the trend line, way above it. But that's just from 08. You can go back further. It's a little different, but just kind of creeping upward here. We had that big drawdown over time and just flattened out here kind of like June and started picking up right here, March, April. So, I think M2, we've shown lots of charts on that in the past, but it definitely helps fight inflation when you're drawing down M2. So it looks like they're picking it back up a little. I don't know if that's probably bullish for stocks, but I don't think it's bullish for inflation. So I just want to pull that one out. Balance sheet, the same type of thing. Had a little more of a move, but it's still off kind of like that trend line. And let me draw one real quick. So kind of like off a little bit, So seems like they're slowing down. They had talked about that a little bit. So, less selling is obviously bullish overall. Maybe they're sensing trouble. I don't know. But, this is post-COVID kind of start, 7 trillion. So seems like they're slowing down as they get to that. There's your inflation right there. Thanks. Okay. Had a couple charts and then I'll open up the questions. Just some real estate stuff I saw. So this is Schiller home price inflation adjusted home prices. So this guy likes to sensationalize a lot, but I mean you can see right here. This is from Schiller. All-time home price index seems like pulled back just a little bit from the top there, but this is back in 08 type time frame. Just throwing them out there. I'm not saying to mean anything. New house for sale. So we're in the South, most of us. So you can just see the build up here. Homes for sale just really kind of picked up big recently. And then the other part of that is mortgage applications. I think this reflects all the rates, the high rates right now and affordability. So we're back to 1995 kind of levels. You know, just been a big drop off since post-COVID, just pretty much straight down as these rates got jacked up. So we'll see if we start cutting, but obviously could be issues in the housing market, but you know, it's very resilient overall. I don't think they have the amount of delinquencies like we did back in '08, and you know, people having 7 houses with no income verified. So I don't think those problems are there, but you know, definitely looking a little bubblish. All right, I'll open up to questions, comments on the market overall. And you know, shout out, Sadir was bearish last week. So
Yeah.
that was-
Josh, this is Winslow.
Hey, Wenzel.
I was listening a couple of days ago to on Bloomberg or something. The head of Solomon, the head of Goldman Sachs, said that the carry trade was about 50% over. You know, because the Japan raised rates and everyone thinks the Fed's going to lower a lot.
Yeah.
So other than the VIX spiking and presumably coming down a bit, does it make, I mean, he's saying that that carry trade is 50% over. I mean, does anyone keep track of carry trades and know what the volumes are and all that crap?
No, well, I'm sure people involved in it is, you know, my understanding is it's just basically based off interest rates and currencies, basically swaps. So,
Yes,
you know,
yeah,
so I'm sure that, you know, the big players who actually execute that, you know, basically, you know, get money loaned to them so they can get interest rate here higher than there. And yeah, that's basically like the carry trade. So,
kind of like playing Monopoly. Okay, so there's nothing to track that other than his statement.
yeah, I wouldn't know where to find that
Yeah, yeah.
information. I think it's held by the banks. So,
Right.
but
Okay.
yeah, they were saying it's like 50% unwound. So it's like, but yeah, I guess it's a lot dependent on, you know, this right here, USD, Japan,
Right, right.
the values involved here. So, you know, that had just had a massive drop, you know, for currency. I mean, it's only 15 points. Yeah, that's nothing for a stock, but for a currency, that's huge. So,
Yeah. Okay. All right.
mhm,
Yeah. Thanks.
sure. All right, next up, anyone?
Yeah, I got a comment on your kind of a follow-on to what Winslow was just brought up about pundits saying, well, trying to, they're kind of grabbing at straws, trying to put a finger to the causes for the big moves in the market. I think most all the pundits are recognizing that there's more volatility now, and they're trying to guess at why. And you know, I've heard
Yeah.
the recession is now back in you know, possibility.
Right.
The Bank of Japan, you know, is like, it came out of nowhere. Oh, well, they're selling off the Magnificent Seven when it was the only place to put your money for a little while, for a long time. It's they're you hit the nail on the head when you said that things are just volatile. They're volatile, more volatile now than they have been for quite a while. But there's no, in my opinion, there's no real reason for saying there's a recession now when we could have said that back in 2022. And we had a much more reason to say it back in 2022, but you know, we got over that. But now it's well, the Fed's going to cause a recession now because they didn't cut soon enough. Well, I'm not buying that. But yeah, there's no, the market is, if I had one word to sum up the market, I would say schizophrenic right now.
Mhm. Yeah, that's a good description.
not only in the indices, but the sectors within the indices and the industry groups within the sectors are, trading, swapping places every week. So, and now we have the election coming into view, so it's only going to get worse.
Yeah, I mean, look at VIX, look at the 10-year, look at the, I mean, they're
Yeah,
all,
I had that up before while you were showing your big study. If it's back to 10 years, yeah, you look at it, we're peaking now. It's it's 28 today, I think. And the NASDAQ and the Qs are up at 30.
yeah, it's
So, pick your reason why. There's a lot to choose from. And it's like the problem is there's too many reasons to choose from. I think that's the problem. Just saying.
yeah, that's good comments.
The market is very hard to trade with VIX above 20.
What's that?
The market is very hard to trade with the VIX above 20.
Mm-hmm. Yep.
It's just, like Dave was saying, it's just very volatile and it could go either way.
Right.
When the VIX gets that high. And so I personally don't think we've hit the bottom mainly because it's just seasonally such a bad time for stocks.
Mm-hmm.
And with the VIX above 20, I lean bearish still, but
Right.
it's very hard to predict when the VIX is up above 20.
Yeah, the thing was dead for a long time, so
It was.
I was
dead.
just shocked it got that high. I mean, a 2-day move. It wasn't even like we're limit moves or anything,
Right.
So, yeah, interesting. But yeah, good call last week, Sudhir. Joe wanted me to make sure they give you the shout out on that. So,
Thank you.
all right. Anyone else? Okay, let's go through earnings. Lots of tabs. Earnings isn't great. I'll just tell you. It's not like horrible or anything, but this one's real bad. AMAT. But overall, so we're down mostly because of this AMAT. 3 closed positions, 2 of them winners, 1 kind of break even, and AMAT, just got decimated with all the other tech guys. So down a little there. Bearish pre-runners. It's up a little. 7 closed. So kind of half and halves, but eking out like a little profit there. Bullish runners. We're down. Yeah, we're down a decent amount here on the bullish runners. So yeah, I still got some time on these, but the bullish aren't doing that good. Bearish runner, I think there's only one. It's this open trade match, fairly recent. And the vol rise are doing fine. Those have been doing good the last few quarters. So this one is a loser, but Disney got a nice pump for earnings there. So that one's up decent. And then non-movers down. We had that one in XPI. Same thing got hit, it was creeping back and then just got hit on that Thursday, Friday. So overall, I'd say we're down some, not like a ton, but very volatile market. So any questions on that?
Now, as you were talking, I'm wondering if there is a correlation between the VIX and the earnings plan result.
Mm-hmm.
Looking back over previous years.
Yeah, it might be something to look at.
Might be something to look at because, like I said, when the VIX gets high, it's just everything kind of doesn't follow a pattern. It's unpredictable, doesn't follow the trends that things used to follow.
Right. Well, I definitely, yeah, am in a wait and see environment right now, you know. Especially, you know, if the Russell got held above that 21, I'd been, oh yeah, we'll be all right. But pretty much just turned south. Same thing. S&P is pretty far away from 5,400, so we're kind of in those ranges, you know. Right now, I'm just seeing if, you know, Russell will hold 2,000. You know, just kind of wait and see. I wouldn't be super aggressive right now.
Do we have a summation on earnings for this quarter out yet? I think probably we're probably at 75% reported now or more, maybe.
Joe has all that stuff. I don't know if he sent anything. I don't
It,
organize.
it sort of seems like feels like that the expectations. I don't know where we placed this year, this quarter, but I know the mega cap tech stocks did not wow. They sort of underwhelmed for the first time in a while, and I think that kind of jammed up the last Thursday, Friday kind of sessions. And maybe that's the when the market seems to just go up when all things with everything being considered have as long as the future at any point in time, as long as the future earnings in the future of whatever that point in time is good, the market goes up.
Mhm.
Maybe now the expectation of future earnings is not as bullish as it was in the last 2, 3, 4, 5, 6 quarters.
Yeah, we'll have to, you know, I'll ask Joe. He'll have some numbers for us next week on that. I think it was, you know, it wasn't like it was some outlier where, you know, like 40, you know, percent missed earnings or something. It was kind of in line with historical type thing. But, you know, so the ones that have been missing have been getting destroyed, you know.
Yeah,
Like
that kind of happens every quarter.
lower. I mean, this one's getting crushed. This, you know, you miss, you get crushed. So, yeah, I'll have Joe. Well, he'll be back next week. So we can try and get some numbers on the earnings there. Okay. Anyone else? No Joe today. So anyone else questions, comments before we wrap it up? Okay. Well, thank you all for attending. We'll do it again next week.
Thanks,
Thank
Josh.
you.
Thanks, Josh.
Thank you.